Can gold stay above that previous all-time high in December and push higher following FOMC, or is this consolidation likely to fail? That's what we're talking about in today's video. All right, so let's go ahead and jump right in, guys. As always, if you enjoy the content, be sure to subscribe to the channel and click that bell icon for notifications because I am putting out these videos every single weekday. All right, so looking at gold, guys, XAUUSD on the daily chart. This is the level that we've talked about previously, so right around 2140 to 2150. This is going to be the level that bulls have to hold the market above into today's FOMC. Now, the concern that I have right now with gold is the way that this consolidation looks, specifically these lower highs that the market is putting into that support area. Okay, so we know that the previous all-time high, this is it right here. And so far, we can see that gold is putting in these lower highs into that support level, showing potentially that bulls are having trouble lifting the market off of the 2140 to 2150 region. Okay, now we could see it break out here on the 4-hour. However, there are still about 2 hours left in this current candle. So you can see where the market did come up here, take out these recent highs. All right, so it swept these recent highs. And so far, it is trading right there at that trend line that we've talked about off of the all-time high back here. So right around 2195. And we have several highs along this. And currently, again, the market is trading right there at that key level. Now, you've got to keep in mind that we do have FOMC coming up. So be really careful trading this either way. I don't think that right now is the time you want to be trading gold just because of the volatility we have coming up here with FOMC. Now, again, the concern I have with this consolidation are the lower highs that have developed since this high up here. And furthermore, what we're going to take a look at right now is the potential for a liquidity trap. And what do I mean by that? Well, you can see the back here on this breakout on March 1st and March 4th. Notice these two green candles back here. Okay, so this is the concern right now. When you combine the lower highs into this support area from back here in December, okay, this is the concern right now because we have these pockets down here that have yet to be filled in. Now, they don't have to be filled in, right? There's no guarantee that we see the market come down here again. We could just see a breakout following FOMC, break above this area here and continue higher up here toward 2195 and even higher. But when you look at this down here, we've talked about this before on this channel, where you get these breakout candles like this one right here. And notice how there was really little to no retrace on that candle. So the market opened here, gold opened here. We got a very shallow retrace and then the market took off again. Okay, now this one back here, same thing. And this one is really significant because this candle was the breakout candle that took the market above this area around 2075. So again, notice how the market opened here. We got a very shallow retracement. Same thing right here on this candle. All right, now we're going to take a look at the DXY, the dollar index here in a moment, because that's going to matter for gold as well. But when we talk about liquidity traps, the reason that this develops, guys, and this is really critical to know for not just gold, but any market out there. When you get a large candle like this, all right, let me move in here so we can really see what's going on. These two candles right here, okay, so this one and also this one. These were very aggressive moves. So what happens is you have buy orders that are left open down here in this area because the price moves so aggressively that a lot of these buyers were not able to get in, right? And market makers, their job, one of their jobs, is to make sure that there is as much liquidity in play as possible. Okay, so on a move like this, you get a lot of buy orders that are left unfilled. And that's because, again, we had little to no retrace on the very next candle. Now, ones like this, you could make the case that this is a smaller body. So this retrace right here was almost to the 50% of that body just because the body of this candle right here is so small, right? But you look at candles like even this one here, right? You could even make the case that this candle right here, we have seen little to no retrace in this area. Furthermore, we have these lows that are building up, which means liquidity is building below those lows. Okay, so you've got to be careful here going into FOMC because we do have a lot of sell side liquidity building below these lows here, as well as in these candles down here, again, because we have a lot of buy orders that were left unfilled due to the aggressiveness of those moves and the lack of a retracement on the very next candle. Okay, now what is it going to take in order for this to happen? And this is really important, guys. I can't stress this enough. But right now, like I said, this area at 2140, this is going to be key support. Okay, so if you are shorting here, you are shorting right into a critical support area because, again, for all we know, gold could just take off and take out this high up here. Furthermore, we have FOMC coming up, so there's going to be a lot of volatility with today's session. Okay, so for gold to target areas down here, right, this candle down here as well as this one, which again, that was a significant area around 2075 that gold broke out from recently earlier this month. In order for gold to target both of these areas, right, the one thing that has to occur is we have to see a sustained break below 2140. And the 4-hour time frame, guys, is not going to cut it, because if you look at the 4-hour, notice this candle right here. It was marginal, but you can see where it did take out these recent lows and then just close right back above. Okay, so we do need a daily close below 2140, okay, down here, all right, sustained break below here on the higher time frames in order to target areas like 2100 and potentially 2075 and maybe a sweep of that level. All right, until that time though, again, 2140 is going to be significant support. So I do not, it's not financial advice, it never is, but I can't sit here and say that this is the time to short just because, again, you would be shorting right into support. All right, so we'll see what we get with today's FOMC, guys. But these lower highs, again, right into support shows that buyers are fatiguing a little bit potentially. And we also have these unfilled areas down here, also called fair value gaps, right, in the market, where you have this imbalance in candles like this that could potentially get filled if we see a sustained break below 2140. All right, now let's take a look at the DXY, guys, the dollar index, because even though it really hasn't mattered too much here for gold, gold has kind of been doing its own thing recently. It is going to potentially matter as we head into FOMC and also the aftermath, of course. So right now with the DXY, this tends to move inversely to gold. So we can see that the DXY is trading well above this area. However, the one thing you have to pay attention to is the daily close, right? So when we look at that, the daily close yesterday closed right at this area around 103.8. So this is the upper boundary. Notice these highs back here. This is the upper boundary of that level that we've discussed, right? So as of right now, it's kind of questionable in terms of, has the market broken above this on a daily closing basis? So you have to be aware of that. Also with FOMC coming up, there is still a chance that we do get something like this here from the DXY, right? A move down here into this candle, which there has been little to no retrace, in fact, no retrace since today's open. Okay, so if we do get that, then of course we could see gold, pop a little bit if the dollar does pull back like that. All right, so just keep that in mind. But if we see this week close above 103.8, okay, above this area up here following FOMC, if the dollar can reclaim this, then in my opinion, we're looking at 104.5 and 105, which could put more pressure on gold. And of course, if we do get the dollar breaking back down below this area between 103.6 to 103.8, that exposes the 103 area. And that, of course, could be bullish for gold. All right, so all things to keep in mind here when we're talking about gold, where the DXY is trading, where it could close today. Just keep in mind, though, all of this could change very quickly with FOMC. Okay, so flipping back to wrap up here on gold. Again, you can see where the 4-hour is trying to break out, but again, 2 hours left in this candle right now. And we also have FOMC coming up. So this could change very quickly. And I still kind of think, though, you've got to be careful trading away from areas like this down here, right? Especially if we get the sustained break below 2140 down here, below that previous high from December. If gold trades down here on a daily closing basis, I think we're headed back down here toward this area before we get a bounce. Alternatively, if the market can break this trend line, hold above it, then we could be looking at a move back here toward the high, 2195. And from there, targets are kind of hard to come by just because the market would be in breakout territory toward new all-time highs. From there, you'd really have to target psychological levels like 2300. So we'll see how this plays out, guys. I do think, again, you've got to be a little bit careful trying to long this, just given the recent price action and also the imbalances here from earlier this month. Be sure to subscribe to the channel and click the bell icon for notifications. Don't forget to claim your 70% off VIP access. See the link in the description. Trade well out there, guys. Be careful of the volatility, and I will talk to you again tomorrow.